Hey, good morning, everybody. So we've got job numbers coming out probably right about now. So I do have my phone on the side to see what the market reacts to job numbers. But first, I just want to talk about a posting that I made because yesterday, let me just get to it, see if I have it here. Okay. Transparency. Yesterday was my worst trading day of the year. Not every day is a winning day. So let me talk about what happened yesterday. First off, if you go back to Discord, and let's just do that real quick. Let's just pull up Discord to do that. Okay. So Romeo made a posting yesterday. You know, Romeo does his live streams, talks about orbs, magnetic draw of the market. Now, he wrote, it's crazy how y'all are so bearish. Like you had a chance to grow on calls today and make a ton of profit. Instead, you were looking for puts. Now, I took this one personally because yesterday, I'm going to talk about my strategy. We spoke about yesterday morning where I gave my bull case scenario, and I said, bull case scenario, the SPY is going to run to 413. That would be extremely strong.
Welcome back to
All right, let's see what the market does off that,
here live at CME HQ with the final litany of breaking news on this Friday, the last trading day of the week. Let's start out with our March read on retail sales. We're expecting down 0.5%, and this is the advanced look, so it will change. Down 1%, much less than expected. The last time we were down 1%, well, that is the weakest month over month since down 1.1 in November of last year. And if you strip out autos, down 0.8%, double what we were expecting. We're expecting down 0.4, down 0.8 is the weakest. Well, you have to go way back a bit. You have to go down to the last month of 21, Dec of 21, ex autos and gas, down 0.3, also a bit better than expected. Actually, we're expecting down 0.6. And finally, let's complete the 4 negative signs in front of the advanced retail sales. The control group, which gets pinned into other higher up the food chain economic releases, that's down 0.3%. Import prices for March down 0.6 month over month. If you strip out petroleum, still down 0.6. Export prices, well, you know what? Why don't we do import price year over year? Year over year looks are good. And this one is a whopper. Minus 4.6%. Minus 4.6%. If we look at export prices now, shift gears month over month, down 0.3, year over year, down 4.8. So pretty much everything I've said today had a minus sign in front of it. All import prices, all export prices, all metrics of retail sales. The good news is that we started out the year with a rather strong retail sales number. But if you're looking at the rate of change, maybe something to pay attention to. We talk about funding of banks. What about funding of consumers? Oh, and by the way, the Atlanta Fed wage tracker for the month of March moved from 6.1 to 6.4. So not all the news is good with respect to prices, and yields continue to firm up a little bit on the data points I just gave you. But do keep in mind, we're 347 for a 10-year. It settled at 345 yesterday, but it settled at 339 last Friday. Joe, back to you.
All right. That 2-year loves that.
Matt. So let's go back to Matt. So let's just talk about predictions. I'm going to give you my story from yesterday, but first, predictions. So predictions yesterday morning, I told you, bull case scenario. We can look at it 2 ways. Once we find the bottom and that the bottom is in and the bottom was at 408, we're going up at least 4.5 points. So you could say bottom was in at 408, we're going up to 412.50. The other thing is bull case scenario. Yesterday morning, I said in a perfect market, it just continuously goes up. You're talking about 413 on the top side. Now, let me just bring that over. Let me see if I can find that information real quick just to share, because I'm going to share 2 different scenarios and how playing the wrong scenario could potentially get you in trouble. Let me just see if I find that. Okay, got it up. Perfect. Let's just see if I bold that. There we go. All right, so let's just bring it up. So what I said, got to add it. Okay, add it to Discord. So it said the same thing to Discord yesterday morning. Let's see, the SPY was at under 409, and I put, if you join me pre-market, once we found a low point, which is 408.71, you could perhaps find the high point by adding 4 bit. I believe the high will be right around 413. Now, a counter argument would be that we've not found the low, that we'd likely reject 411.44. So if we rejected 411.44, we'd go back to 407.44. So if we found the low, I was saying the high was 413. So anybody that thinks the low was in place yesterday, the high was given to you at 413, even though we went to 413.73. Now on the counterpoint, if we find the high and we rejected 411.44, I believe we're going down 4 points from there to 407.44. So I'm going to tell you why I had the worst trading day last year. And it's full transparency. I have great days. Everybody talks about their great days. Everybody's a consistent winner. Nobody ever loses. That's complete horseshit. Everybody loses. Everybody has tough days. Some people have tough weeks. When I interviewed PV, I was like, what's your longest losing, streak? 2-3 days. And he was like, no, 2-3 weeks. So again, everybody struggles. Yesterday, I said to myself, bold case scenario, market rips higher, rips higher, rips higher. 413 on the top side. I said, that's a little ridiculous. I'm expecting rejection at 411.44, and I'm expecting us to go back to 408. That was my strategy. I took the counterpoint, and that's how I traded. So rather than waiting for rejection, because at 411.44, when I got in my position and I saw us going up to 412, and I said, okay, we're hovering around 412. Let me buy some more put contracts. And then we went up to 412.50. I said to myself, I know we're going to 413. But if I sell now and we do a market dump like yesterday and it goes down 2 points, even if we get to 413, we'll be back at 411. I'll be in a better spot than I am right now sitting at 412. So that was my strategy. Sell off the past 2 days. One happened at 2:30. One happened at 3 p.m. You just have to hold, Matt. We're going to 413. So when we hit 413, again, I was expecting rejection. And then we're 413.25, 413.60, 413.70. And I'm like, okay, definitely looking to take the loss here. I would have to expect the market to give back. And then I said to myself, okay, for the market to give back, go back to 410. It's a possibility, but you'll have to hold overnight. So I made a decision at that point with my options being worth $50 a contract, I would hold overnight. Now the contracts are worth $32. The SPY is probably sitting flat pre-market. Let's just guess, maybe down a little, 0.07, 0.10 now, 0.12 now. Okay, so I'm looking for a drawback to 410 on the SPY. So let's talk about the SPY ranges, why that could potentially happen, and what is likely to happen today. Okay, first off, if you're looking at the SPY, I've seen tons of charts that say 415 is going to be strong rejection. There's a bunch of supply zone there. So if I say to myself, 415 rejection, I go by the same strategy as yesterday, which didn't do me much good, but we reject 415, we're going down to 411. We reject 414, we're going down to 409, like 80 or something like that. So what am I looking for? I'm definitely going to be in the rejection ballpark, ballpark, whatever. Okay, now let's talk about some certain stocks that I wanted to bring note, because some are bullish, some are bearish, and some are great plays coming out. First, AMC. Haven't spoken about AMC in the longest time. Dude, I never spoke about AMC until I think AMC is ready to pop. So, AMC, outflow, what was it? 3 straight days, is that what we saw? 3 straight days after some good inflow when AMC dipped under $4. If you missed that $4 entry, don't think you're late to the market, because all AMC needs, okay, and I'm not saying it's happening today, but the cost to short, the cost to borrow shares against AMC is through the roof. So it's telling me one of these days, when the smart investors figure out the cost to borrow is through the roof, and they already know, they're going to get together, and it's going to be a strong inflow day with massive volume, and AMC is going to go up to $7.17. There you go. It's $5.46 right now. I'm saying $7.17. That's just my opinion. Okay, let's talk about some other stocks. Oh, yeah, Boeing. So I'm using Discord yesterday, and I'm checking out Boeing because I want to do Boeing puts. Rather than doing SPY puts, I was so close to doing Boeing puts. And at the time, Boeing was $212, something like that. And I said, I think Boeing's going down. And I looked on Discord and I looked at all the data that it was giving me. And unfortunately, Boeing didn't have enough volume in the options to tell me or confirm that my belief was correct. And I would have got lucky because Boeing said that they're having some problems with their 737 jet. And Boeing was off 6% this morning down to 201. In fact, it's still at 201. So a massive move like that, we're talking about probably 1,200%. So I took the loss, or I'm going to take the loss on my SPY puts, right? Whereas Boeing would have made me like, I don't know, 1,200%, 2,000%, 20 times what I invested. Now, again, my investment was like, what did I put in? About $800. So we're talking about maybe $16,000 versus a loss of $600, of $500. So yeah. Okay. Next, I've got Morgan Stanley on my list. Why? Because bank stocks are ripping this morning off of JP Morgan's earnings. So JP Morgan ripping higher. Yeah, I get it. JP Morgan earnings came out in $4.10 a share. Estimates $3.41. Okay, so they beat by like 18%. It's a decent beat, quarter one. Understand, JP Morgan is the best of the best banks. So the fact that all these other banks are going up, I already know Morgan Stanley is going to have a shit quarter. That's what my guess estimate is. Now, JP Morgan loans 6% up year over year, flat quarter after quarter. Deposits down 8% year over year, 3% down quarter after quarter. Well, that's not a good sign for the banks, in my opinion. So again, I've got Morgan Stanley up there, up 7.6. When I see Morgan Stanley peak today, I'm buying puts. So a couple days ago, I mentioned put on United Airlines. Stock went down 6.5%. The day before that, I mentioned whatever the market was doing in the last 30 minutes of trading, expect a 2-point move in the SPY. If the market was green, it'll dip. If the market was red, it'll spike. What happened? We were green that day. We had that massive 3-point dip. So again, I'm looking for my next trade personally when Morgan Stanley pops this morning, and yesterday's high was 85.78. So we're going to hit a new high today for, the weekly, up 1.7%. Again, I might look for it to be up 3%, maybe double what it is now if the market's having a strong day. Wells Fargo, again, I was late to that one. There were some calls bought on that. I'm staying away from that. I happen to think the SPY is going to retract today. Again, I'm a contrarian. I was looking for rejection yesterday, 411, 412, 413. Well, the real number should have been 413. So we went past 413. If my entry was 413, I'd still be holding my puts and I'd be feeling good. Don't worry, we just got to go into the 413. We're going to hit the 412, 411. No, I needed to go down to 410. So I'm not letting that influence my decision. If you're in a bad trade, here's how I start my day. I say, okay, I'm in a bad trade. I'm down, whatever. It doesn't matter. I'm at where I'm at now. So the fact that when the market opens and my options are worth $34 and I've got 12 contracts, I say to myself, okay, at $34 a contract, what would be a good exit strategy? Where do I see the market potentially dropping to or spiking to? And how do I see it playing out? So when I say, how do I see it playing out? Well, if you're going to have a bearish day, what generally happens to the market? It opens higher. A bearish day, you generally see a spike until you get rejection. So if I see 413.47 where we closed, all of a sudden the market gets bought up to 414.14, 414.20, and we reject that and we head down back to 413, then I'm going to say, okay, if that potentially was the top, 414.40, then I'm going to say we're likely to hit 410 at some point later in the day. And I will play my, options accordingly. Now, vice versa, if we see a bull day, what would likely to happen? Well, we'd likely to see a little pop and then a drop, maybe a second drop, and then they're buying the dip. So if you see a drop and a second drop and then full support and buying the dip, yeah, I apologize for the bad image. I guess all the weather lately. Anyway, so I'm expecting the SPY to pop 414, go down to 410, maybe 409.90. That's my plan for today. As far as what we can see. So let me talk about a couple other stocks that I've been watching lately. I've got Lucid up there. Why? Because there were a ton of shorts on Lucid, and they came out with delivery numbers, and they disappointed yet again. I made a posting on delivery numbers. Oh, I got an interesting point. Yes, they announced disappointing volume delivery, 1,400, estimated 1,800. So 1,400 cars, estimated 1,800, right? Let's just see, down 10, 14. They're coming out with quarter one earnings on May 8th. Now, here's the other thing. I'm on YouTube. You guys are watching me. Well, here are some other YouTubers. Oh, all these guys are from CNBC. So this is a post by Heisenberg. CNBC went full bear mode yesterday. They all dropped YouTube videos. So yesterday, Truist Keith Leonard says expect mild market sell-off amid earnings season. Morgan Stanley's Chris Toomey is bearish on stocks, expects dramatic sell-off. JP Morgan's Jack Manley says he's negative short-term on stocks, but positive long-term. Veritas's Joe Terranova, no, that wasn't it. Okay, another woman, recession risk not already priced into the stock market, says Lauren. And the last gentleman says, expect pullback to hit market over the next 3 to 6 months. And then Fargo and Wells Fargo is up today. So, I mean, up 3-4%. Wells Fargo is one of the shittiest run banks. Doesn't matter their balance sheet. But all of these analysts dropping 2 or 3 minute clips saying huge sell off, and they're getting tons of views. So, I mean, that's just that. Again, there's the Boeing thing. I was so disappointed. It was 213 on change. Really should have been in that one. The Lucid I mentioned. Okay, here's another interesting fact. The VIX flow for yesterday, for Thursday, the VIX volatility in our market. VIX flow was 6-to-1 ratio calls to puts. So yes, it could definitely be people hedging as the market's going higher and their portfolios are going up 2, 3, 4, 5%. They could be saying, let me take some VIX calls in case we have some type of pullback. There's a chance there. Or people are just betting February highs. Remember, we were at this point back in February. However, we're doing it on light volume. So people can be saying that. What I mentioned yesterday, when I mentioned pre-market, a potential bull case scenario pop to 413, I said there would have to be a ton of short covering yesterday. So another person I follow on Twitter, super massive short covering. Too many were expecting downside volatility, meaning too many hedge funds, too much big money was expecting downside volatility. What do they do? As it's going up, they have to cover their short positions. So every time the market hovered and I'm expecting rejection, they're covering their shorts. Market's going higher. Again, the magnetic draw was to 411. Then it changed to 412. Never got to 413. But there's major shelf volume at 415. Gamma exposure on the 414 strike is building. This can be seen across all strikes and expiration dates, including today's expiration date. But there's significant supply zone at 414. That's basically exactly what I said. So we could definitely be drawn up to 414 level where I expect supply zone rejection. And again, if we go up to 414 and we shoot down and we're going to cover, I don't know, a 4.5 point, 5 point range on the SPY today, then I'm saying 410 is definitely in play as far as what I'm thinking. Light volume. I mean, here it was. Yeah, I already mentioned that. Yeah, those SPY puts, $45 a contract. I think they're going to open at $32 a contract. Definitely not happy about that. Earnings, you got United Health, BlackRock. In my options, here's what my option charts look like. So it continuously had spikes all the way, riding it down until yesterday where there was no spike. So again, I was just looking for data for the pattern to continue. And again, yesterday's pattern had to be some short covering. My day yesterday, trading day yesterday, I opened up the market. I was up 108% that I sold my overnight positions because I said I was in calls overnight. Market popped yesterday morning. Got out of my calls. Now, the greatest thing about my calls was I was in a firm. I got out towards the top. I was in Upstart. I got out towards the top. I was in Netflix. I thought I got out towards the top, but I did a good job selling. But I'm still watching these stocks for the remainder of the morning. As I see them, Upstart just turns negative from $17.06. It closed at $15.77. So I was like, okay, I got out at a great time. It has downward pressure. A firm was seeing some downward pressure. DraftKings, these more speculative plays were seeing downward pressure. And I'm thinking, okay, the market's due for a drawback. That fed into my strategy. Now, if I was focused on Apple, which just kept ripping higher, or Microsoft, which probably just kept ripping higher, and I haven't looked at Microsoft. But the point is, I took a winning day, a killer day, 100% day. Do that. So it's terrible. Now, here's what got me. I was using the algos and flows. Now, they're generally right 90% of the time. As algos and flows cross over, there's either bearish divergence or bullish divergence. The algos tell you the market and the price of the market is down here. They're going to meet in the middle. Same way when you see bearish divergence. I played yesterday, and again, instead of bearish divergence and them coming together, it's going to take a little longer because the market spiked up even higher. The algos went up. So there's still divergence, which means I still think the market should be drawn down a little. However, if the market goes up, the algos will follow suit. All right, let's just see if we have a couple others. Yeah, and here's nothing. These D-Dog puts, right? You can see that up 56%. D-Dog, which is inflow, day after day after day. Net, same thing. Cloudflare, inflow. So I didn't post that one on Discord, which is up 56%, because I said to myself, well, this stock keeps going up day after day. I'm taking a risky position. Let me find something a little more solid. Let's look for a SPY trade. I should just post all my trades. These are the upstart calls from yesterday. Y'all heard me get into those, up 222%. Talked about recession. We talked about Alibaba. Okay, so Alibaba, another stock, interesting, okay? Because the calls came in on Alibaba, the $100 calls expiring this week and next week. Alibaba's sitting at $96. So if you think today is going to be extremely bullish, you think the SPY is going to jam up, which I don't, to 418, 419, then I might be in an Alibaba play. Now, I don't think that's going to happen. Again, I expect market rejection at 414, 415. Again, you can go plus or minus. Let's see where the market is. Oh, okay, pre-market. Finally, it fell a little. I mean, this is what I was expecting. Again, banks are crushing it, banks earning-wise, off of just JP Morgan. So all the banking stocks are up this morning. And I'm saying to myself, banking stocks are up and the market is flat at this point? That doesn't even make sense. How can the market be flat when banking stocks are supposed to lead the way? So it's telling me that I don't believe the banking stocks are going to rip higher. I think the fact, would I fade JP Morgan up 6% pre-market? JP Morgan is going to be the best of the best when it comes to banking stocks. So no, I wouldn't fade that, but I could definitely still fade the market. See, here's the other problem. When it's like the boy that cried wolf. When I'm expecting rejection at 412 and it goes to 413, when I'm expecting rejection at 413 and it goes to 414, I can't keep saying, oh, I'm expecting rejection, because it feels so bad to be incorrect. I mean, you know, one of these days, like the clock's right twice a day, you're going to say, oh, there's a rejection. Hey, I told you all the rejection was coming. So again, I'm a bear. I think the market is frothy. I think we're headed, if we're not in recession already, I think earnings are going to struggle this earnings season. So we still have 3 weeks more of earnings. And yes, earnings estimates came down like 10%, but they're still too high. If you look at the earnings estimates for the S&P 500 companies, I think the analysts have them at $220. But if you look at specific bank analysts, they go all the way down from $210, $200. And when I say earnings per share, you take the S&P 500, each of those, you know, companies, you take their earnings per share times the weighted average. And again, we're talking about, you know, $220 for all 500 companies. So again, I'm still looking for downward pressure on the S&P. I'm still looking for the SPY to go to 410 today. Now, why did I mention 410 as a specific level? Well, that's a great freaking question. What would I do? I would go to Discord. I would go to the Flow and Algos room, and I bet there's going to be a huge dark pool level. So let's see if I can add that for everybody. Let's get that on there. Boom. Let's go to Discord. Here we go. That's the dark pool for McDonald's. So someone's looking at McDonald's. Again, you know, McDonald's has hit an all-time high. You're still looking. When you see, and you're trying to play price, the put premium, break zero, become positive, that's the time I would get into puts. Until that, you're still, I mean, McDonald's is at an all-time high, right? So what would I look at? I'm going to look at the dark pool levels for the SPY, and I'm going to tell you why I believe 410 is going to be a point of concern. Now, as you can see, 410 is the largest dark pool level there of 33 billion, and it's been added to day after day this week. So the fact that we're hovering above 410 tells me it's likely to act as support. Now, I hope it acts as rejection. I hope we break 410 and we go down today to 407.60, the next level down. But again, if I'm a bear and we're sitting at $413.50 and I want the market to go down, I have to understand where it's likely to bounce off of. And it's plus or minus, 10 or 20 cents. So if we go down to $410.18, would I be happy? Yes, I would still probably be in the loss column, but I would be substantially less. I mean, we're talking about probably down like 58, 60% right now on those options. So yeah, if I take like a 4 or 5, 6% loss, be more than happy. It would be a great day because again, I look at things from where they are right now, where my position is right now. Not, you can't be like, I'm up 200% on this option play. You look at it like your option's worth $8. Is it going to go up from there or down from there? It's worth 80 cents. Do I think I can get 96 out of it or more? Or do I think it's going to draw back down even lower? Okay, so let's see what kind of questions we have today. Sushi Lover, what's up, brother? Out, might go into recession, rate hikes. If I knew what news specifically you're talking about, if you're talking about what the Fed staffers said 2 days ago, which we read in the Fed minutes, which they actually said last month, is the Fed staffers all believe we are headed to recession. Now, I've said that already. Again, we're all headed to recession. But what's going to make the markets believe we're headed to recession? It's going to be bad earnings. So I'm going to look at the earnings. I'm going to overanalyze the earnings, right? Revenue growth and earnings per share growth. If revenue growth stays flat or even increases, which is top line, but earnings per share growth decreases, which we've seen so far on average of the companies reported, they're reporting negative 20% earnings growth. Does anyone care about that? But what the market cares about is what the Fed is doing. So 25 basis points, May 4th, which I think is the next Fed meeting. And then they're going to talk about a June rate hike of 0 basis points, 25, 50, who knows? And then they're talking rate cuts by the end of the year. So right now the market has factored in 1 rate hike in May, 2 rate cuts by the end of the year. Remember, it used to be 4 rate cuts. So we went from 4 rate cuts by the end of the year to 2 rate cuts the market has priced in, yet the market keeps ripping higher off lower volume. So again, that's just why I'm hesitant. You see the market right now at 412.50. So 412.50. Now we'll look at the SPY again, dark pool level, 412.50. Let's just go there. What do we see? Okay, 412.56. Holy shit, we're right at the dark pool level. So could the market freeze right here and bounce higher at 412.50? Yes, because everybody sees that there's a dark pool level. I'm not the only one. So it's a question whether that dark pool level turns into support or not. Yeah, they're all saying mild recession, so that's not a problem. But understand, the market is looking at 412.50 as support. If we break down to 412.20, okay, which is 30 cents under the dark pool level, then yes, I'll be like 90% sure we're going to 410 at some point today. Again, bank stocks ripping higher, market going down. Imagine if JP Morgan missed. Market would be ripping a hell of a lot lower. Now, my opinion on banking stocks and the manipulation of banking stocks is, and it's no surprise, that bankers are crooks. What are they likely to do? They're likely to report earnings, buy each other's stocks, push each other's stocks up. Then the market follows. Oh, we're all stupid sheep. Oh, JP Morgan's up. Let me buy some JP Morgan stock. Great. Then what do? They sell their own stock. I mean, I don't know. It's a possibility. What do I think of Tesla today? I would have to. Sorry, excuse me. Tesla today. What would I have to do? I don't follow Tesla on a daily basis. I mean, I do, but I don't really know the levels. So I'm going to look at the dark pool levels for Tesla. I'm going to look at the net flow for Tesla. I'm going to look at the algo flow for Tesla. Now, these are only 3 of my favorites. And flow sum coming usually happens after the market opens. Oh, it's there too. Okay, so what am I going to look at? The flow sum tells me all open contracts, puts and calls, whether buys or sells. So pull this one up. Make sure you guys are looking with me. You are. This is perfect. So what do I see? Well, open interest, just under 1 million, just under 700,000. It's more call heavy. Volume yesterday, more call heavy. Premiums, people paid more premiums for the puts. Buys versus sells. Again, most of it was selling, so they could have been selling the calls. So what do you think Tesla's going to do? Go down. I'll sell you some calls. I'll book the premium. So that's a possibility. Let's go and check out the algo flows. Okay, the algo flow versus the stock price. Algo's saying the stock price should be up a little more. That's all it's saying right there. So again, as it was going up, the algos were all moving up with it. The algos were under. The algos finally went over. So that would be somewhat bullish. Again, it's not much difference here. It's under a point. So for me to be extremely bullish Tesla, I would need to see some type of divergence. All right, let's look at the net flow. Stock prices up here. Call premiums up here. Put premiums. No one is buying puts. So it's hard for me to buy puts on Tesla. I would have to look at the chart. Tesla, dark pool level. Let's just see where dark pool is. And again, the SPY holds $412.50, then stocks are going to go up, right? If they're going from 412.50 and we're going to 415, you know your stocks are going higher. If 412.50 X is rejection, then even if we meander around there, and then we're going to go down to 410. If we're to 410, Tesla's going down. So Tesla pre-market off 1.45 right now, all the way to 1.30. So it's 83.29. If I look back at Tesla, okay, if you have an outflow day and Tesla goes down, where can we go? I'm thinking $180. So where am I looking at the dark pool level? Here we go, $180.86. Right now we're at 183, so we're in between these two dark pool levels. If 184.03 acts as rejection, understand there's a ghost zone here. There's very little supply demand. So if the market has a bad day and you're at 183, you could potentially see 174 in a shitty day. So that would be a terrible day for Tesla. It'd be a terrible red day for the market. I see for Tesla, I see 3 out of 4 inflow days, and the market tends to buy the dip. So if the market buys the dip, then you're going to find support at the 184 level, and you're probably going to bounce higher, 187, 190. Again, if that's a green market, you're looking for 190 in Tesla. However, if I don't have a full strategy for Tesla and a belief that the market is going to go in the same direction, I would stay the heck away from Tesla, because even in bad market days, Tesla used to go up. Good market days, Tesla can hover or just go down. And what happens if it just hovers? It's going to burn the IV. Any thoughts on DraftKings? Was looking at DraftKings yesterday because I mentioned at $19.14. If the market stays golden, it might go higher. However, I wanted to be in puts in DraftKings, but if I thought the market was going higher, I could be in puts. DraftKings closed at $19. It's probably up above that pre-market. It's probably like 39. Let's see where DraftKings is. Draft Kings. All right, let's see where we are pre-market. Oh, under 19. Okay, so it popped to 19.15. I mean, again, just by the last, it has the same exact chart as Tesla, okay? The same exact chart. 4 to 5 inflow days, looking up like this, off a little pre-market. So again, it's crazy. I mean, they're both tech stocks, but they have no relation or correlation other than that. But again, same looking volume, same looking scales. So I wouldn't know. Again, DraftKings, on a good day, you're going to see it's at 18.90 again, okay? It's Lotto Fridays. If you want to take some lotto calls in DraftKings, you're looking for DraftKings to go to $19.40 something cents. 19.40 was a little rejection point yesterday, so 19.41, something like that. If you're looking for DraftKings to go down and pull back, again, under 18. I mean, you're talking about 17.88, 17.84, 18.08. So yeah, I mean, there's more downside potential on DraftKings than upside. But again, if the market rips higher, which I don't think it's going to do, but say the market rips to 417, 418, 419, yeah, DraftKings is going to be at $19.50. Your lotto calls would be great. If the market rips lower, and I think it's going to 410, or we touch 410 today, if 412.50 doesn't show support, even though banks are ripping, then DraftKings is going down. DraftKings will go to $18.26. It would be great for lotto puts, seeing how DraftKings closed at $19. So that's it. Let me just see if we have any other questions. If not, I'm going to head over to Discord, answer any questions there, and drop my morning video with what 1 or 2 stocks I'm looking at to play today. Again, as far as SPY puts or any of your positions, look where they are this morning. You can't say I was down 40% or I'm up 200%. You could say right now that value of that contract is worth $100. What do I think is going to happen? What would be a good strategy to exit? Do I want to add more if it drops to $80? You should have a full strategy in play. Again, if you like what I do in the morning, join me on Monday. Thumbs up. I'm here every day next week, but Thursday, and we're going to try and find a replacement. So again, thumbs up. Like what I do. Share the video. I'll see everybody over on Discord. Have a great trading day.